We produced 10 large form outlook reports over 2013-2015 in a variety of sectors. We've kind of revamped our approach to research, and we're producing more frequently but a smaller form report. So going forward from 2015 to 2016 and beyond, we're looking at doing smaller outlook reports with more up-to-date research that can be published more frequently. The most recent in that series, as I mentioned, is the Manufacturing Outlook, where we partnered with an industry partner or an external stakeholder, in this case IBEC, and we also have 2 customer case studies in that as well, one being from food producer Boyne Valley Meats, and the other from a precision engineering company called DL Precision, or you might know them as Dawnlock. Our partnership with IBEC is it's an interesting one. We're hoping to support them a little bit. You may be aware yesterday that IBEC launched the Manufacturing Ireland campaign, and they launched the Irish Manufacturing Association in Ireland. If you were picking up the Irish Times, the Independent yesterday, you probably saw that. Their campaign is focused on 4 key pillars to drive business activity and drive success in the manufacturing sector in Ireland. Those pillars being manufacturing for competitiveness, partnering for future growth, skills for the 21st century workforce, and the factory for the future. Apologies now if you can't read those slides, so I'm sure they'll be available after. We're hoping to partner with IBEC on a number of propositions and some events to support manufacturing companies in Ireland, and hopefully you'll hear more about that in the coming weeks and months. In terms of the research and the content, we surveyed 273 manufacturing companies in Ireland. They were a broad spectrum of the manufacturing sector, all scales, shapes and sizes. The breakdown in terms of subsectors in the industry is outlined there on the left-hand side. If you can't see it, the highest representation was 21% from precision general engineering, 17% medical devices equipment, 14% food, agri, and then on down was representation from construction, quarrying, printing, packaging, furniture, fittings, and so on. Overall, 71% of the respondents actually export, and it'll probably be no surprise that it's the larger end of that spectrum that are more likely to export. So if you have the FDI, multinational, or large employers, large revenue companies, they have a much greater likelihood of exporting some or all of their production in Ireland. In general, we try to gauge the sentiment of manufacturing companies and the sector. We were pleasantly surprised about the outlook overall. 47% of respondents said that the outlook for their business was positive and they felt it would improve within 1 year, and 39% said they felt it would improve within 5 years. And this is, I suppose, it's going along with the anecdotal information that we hear from our relationship managers on the front line, and also some of the data that we've seen in terms of business activity. Our lending to the manufacturing sector is up approximately 24% for 2015 versus 2014, and that was mirrored by some more of the performance data that we got from our survey respondents. 62% of them said their revenue was up 2015 versus 2014, with 27% saying it stayed the same, and only 12% saying there was a reduction. And also positive news in terms of staff numbers, with 33% increasing their headcount in the year of 2015. We asked a lot of the manufacturing companies to identify opportunities, and the lion's share, over 50%, said we're looking at increasing output. 52% saw development in new products, and others actually said we want to focus on efficiency in our business, be that operational efficiency or energy efficiency, but over 52% said we are now ready to focus on investing in making us the most lean and optimum business we can in terms of our manufacturing performance. These opportunities inevitably lead to investment initiatives or investment projects that are suggested by the respondents. So these are investment projects that are likely to be undertaken in the next 3 years. 88%, a huge number, said they're looking at investing in new equipment, technology or IT. And again, going back to our own experience in the bank, We have seen over the last number of years a lot of our SME community sweating their assets, trying to get as much as they can from their existing equipment. But as their confidence comes back in the medium-term future of their business and the economic environment, we're seeing more and more companies reinvest in medium-term payback projects. So investing in equipment that might have a payback of 3 to 5 years rather than just focusing on working capital initiatives. Some of the other investment initiatives labelled there were new product services, which is obviously encouraging. 71% saying they're looking to export overseas, again, very encouraging. Increased investment in research and development, hiring more staff, and again, looking at energy efficiency or compliance or regulatory measures in their business. So, some very positive feedback in terms of the investment initiatives and investment requirements for manufacturing companies. In terms of challenges, obviously there are challenges too for manufacturers. It's not all rosy. We asked them what they were feeling as the highest or greatest external challenge in their business. If you can see that, you'll see at the top, we've broken those down into what exporters and non-exporters said. So 52% of respondents said they saw an issue potentially with reduced demand, but that was a much greater challenge for those non-exporters. So those manufacturing companies that are exporting and probably diversified, they're not fearing reduced demand as a big issue for them. However, they are potentially, and obviously enough, the exporting companies have an issue with exchange rates. If it's exchange rate volatility or exchange rate management or multiple currency management, that's potentially something that your banker could help you with. And I know we have some of our Treasury representatives downstairs if you want to have a conversation on any issue in relation to exchange rates. And the last issue was government regulation and compliance. 40% of manufacturing companies saying that is a potential issue for them going forward. In regards of the internal challenges, they're all actually quite interrelated. 68% suggested profitability margins, 59% increased overhead and costs, and interestingly, 56% saying energy costs. And you'll see actually that energy costs is a much greater issue for those companies that are exporting rather than those companies that are domestically focused. And that shouldn't really come as a surprise, because what I've illustrated here on this graph is electricity prices for SMEs in Ireland, across Europe. I've highlighted Ireland there at the left-hand side in green. So that is the euro per kilowatt hour price for industrial electricity usage in Ireland. So Irish manufacturers are paying the 4th highest electricity cost in Europe. So if you're competing in international markets, if you have competitors who are based in France, Belgium or elsewhere in Europe, they automatically have a much lower cost base to you, given they're paying in some cases 30-40% less for their electricity than their Irish counterparts. So as more and more manufacturing companies are suggesting that they're going to increase output, going to increase productivity, energy efficiency needs to be a major concern for them. It needs to be a major factor when they're decisioning their investment proposals. As it happens, and as a result of an earlier Outlook report, and earlier research that AIB conducted, we have energy efficiency finance proposition dedicated to SMEs who wish to cut their energy costs. We have a €100 million fund exclusively dedicated to energy efficiency, and we have a proposition that understands the benefit of energy efficiency in business. We understand that implementing energy efficiency is going to cut your overhead, it's going to cut your ongoing cost and create more and more free cash in the business that can be used for repayment capacity for any credit facility, be it a term loan or leasing facility, and we will commit to taking those savings into account when we assess any application that's made. In terms of facilities that can be used, loan, lease, hire purchase, any of those are eligible to be used in the facility. And we're encouraging people that do come to us with investment proposals for equipment that they do consider the the total life cycle cost of the investment decision. If they're buying equipment, don't just focus on the ticket price. Don't be obsessed with just that capex. What is it going to do for your opex on an ongoing basis? Will spending a little bit more money up front save you a lot more money in the medium term? And that is something that we're very focused on encouraging, because it makes our customer base more viable, leaner, more efficient, and it's a win-win. And just at the bottom there, I've highlighted, we're trying our best to walk the walk in this space as well as talk the talk. We last year won an award for large green organisation, and we have gained our accreditation for ISO 50001 and ISO 14001. So we're doing our bit in terms of our own footprint as well. In terms of types of credit available, I've listed a few there. You probably can't read them, but I'm going to focus just very briefly on a business loan. You're probably all very familiar with what term debt is and what a term loan is. But just to mention on that, AIB recently signed a second agreement with the Strategic Banking Corporation of Ireland to provide an additional 200 million of loan finance to SMEs during 2016. I suppose the key benefits of utilising SBCI money is the provision of cheaper finance over a longer term for SMEs. So currently AIB are offering an SBCI loan at 4.5%, which is a 2% discount of what would be the typical standard variable rate for SME lending. So there is real benefit in that SBCI facility. In terms of asset finance, very typical, both on and off balance sheet solutions there, matching any repayment period to the useful life of an asset, typically up to 5 years, but we can go much longer than that if required, if there's useful life in an asset that extends beyond that period. And just finishing up, I wanted to give a bit of a plug to what I think is probably a bit of an underutilised product, and a product that's very suitable to manufacturing companies. That's invoice discounting or invoice finance. Invoice finance is a cash flow based tool that uses your debtor book essentially as security and releases the cash that you have tied up in credit sales in your debtor's ledger. So the major benefit of invoice discounting is essentially that it's self-securing. The bank uses your debtors as security, so as you grow, your facility can grow with you, and it's a great enabler for growth with a lot of SMEs. And we have actually an endorsement there from one of our client customers, a company called Irish Roll Forming Limited. Irish Roll Forming is an engineering firm that was established in 2005 and hit a bit of a bumpy patch, like many others, during the recession. They needed to just explore other opportunities, diversify their business, which they managed to do. They identified some gaps in the market. They changed their product range. They grew the business quite substantially. You'll see that in a quote there from the financial controller, the average year-on-year growth of 40%. So growth at that level will require significant support financially and significant working capital, and that was invoice discounting supported company, and that growth was facilitated by invoice discounting. So as they increased revenue, as they increased their debtors, we could increase the facility along with it and support that growth. So I'm going to wrap it up there, but I would say to you that welcome questions now, or we have a stand downstairs, stand number 32 at the back of the hall. If you want to talk to us there, we have invoice discounting, treasury and finance and leasing reps. If you wanted more information, I just gave you some of the headline figures there, but if you want some more information on the Manufacturing Outlook report or the research that was underpinning it, that's available on our website and the link that's seen there. Or if you have any queries in relation to product or in relation to anything that I've discussed, you can email me directly, or you can visit the website at www.aib.ie/business. So I think that's bang on 15 minutes there, Mark, is it? Thanks very much for your time.